Hey everyone, in this video I've got 3 excellent dividend stocks you can buy for December. But before I reveal what those 3 dividend stocks are, I'm going to share with you again my 7 stocks I recommended for November and their performance, and then we'll get into what these new 3 dividend stocks are.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the 7 stocks I recommended for November, the dividend stocks, were Altria Group, Microsoft, AT&T, the Home Depot, 3M, eBay, and Deere. Now you could see performance-wise, these 7 stocks did extremely well for the month of November. In fact, they did so well, these are unrealistic results to expect for any reasonable amount of time. This is just a one-off excellent month. Now it might happen again, but these types of results are not to be expected longer term. These are the type of results I would like these kinds of results if these stocks did it for an entire year, but these stocks did it in one month. So let's look at that. So starting with Microsoft delivered 16.27% total return in the month of November. I would be happy with that for an entire year. That's an excellent result for an entire year. 3M also delivered 14.32% total return. Again, I'd be happy with that for an entire year. 13.34% for the Home Depot in the month of November. Excellent returns as well. AT&T delivered 9.18%. 8.27% for eBay stock, 6.41% for Altria Group, and Deere, the underperformer in the group, at negative 0.31% return in the month of November. Overall, though, these group of 7 dividend stocks that I recommended for November performed excellently well, and I'd be happy with these returns going forward. So now let's get into the 3 stocks I'm recommending for December. The first of which is McDonald's. McDonald's is offering investors a dividend yield of 1.63%. And you might say, well, that's not a phenomenal dividend yield for a dividend stock. And I would agree with you. But remember, when you're investing in a dividend stock, you're not just earning the dividend yield, you're getting a total return. That's what I shared with you in the early results from November, right? That's a total return. You get a dividend return plus the change in the stock price. And so when you're looking at these, the dividend yield is just one component of the total return. So don't let a dividend yield of 1.63% turn you off from investing in an excellent dividend stock that could give you excellent gains long term. Now, McDonald's is trading at a forward price to earnings of 22.46, which is not incredibly cheap for a dividend stock. However, the reason I like McDonald's stock right now and the long term, and why I'm recommending McDonald's stock as an excellent dividend stock to buy for December, is the company's prospects look better than they've ever looked. The company generated 9.3 billion in cash flow from operations in the trailing 12 months. And what's been fueling McDonald's growth over the last few years is management's decision and excellent, really, transition to the digital offering, right? The McDonald's app, the McDonald's partnerships with Uber and DoorDash have really fueled gains for McDonald's. And it's also helped solve one problem with McDonald's, and that was labor. McDonald's has always had a difficult time securing enough workers to fulfill the jobs, right? It's not a really attractive job to work at a McDonald's. By partnering with DoorDash and Uber Eats, McDonald's gets access to a wider geographical market for each location, making sales increase and reducing the strain on franchisees to find labor for their restaurants, which makes it more attractive for future franchisees to consider opening up a McDonald's restaurant, because now you've got one difficult part of running a restaurant that's a little bit eased. It's eased up just a little bit, right? Because now you can have Uber and DoorDash drivers come to your restaurant, pick up the order, and take it and deliver it to your customers. That's less cashiers that you have to employ. That's less people that you have to employ overall, because you've got DoorDash and Uber helping support that growth. And that's been excellent for McDonald's so far, and I suspect it will continue to deliver excellent gains for McDonald's long term. The next dividend stock I'm recommending for December is Target. Target offers investors a 3.32% dividend yield, and Target has done a good job of returning to cash flow from operations growth. You could see this big decline here coming in the back of those boom times it experienced during the pandemic. Remember, Target was allowed to stay open when competitors had to close their stores, and Target benefited tremendously from that, delivering record profits, record cash flow, record revenue. And so as economies reopened, its business struggled a little bit. But it hit the bottom, and now Target is bouncing back, cash flow from operations jumping back up to 8.8 billion. It had a little bit of a problem with too much of the wrong kind of inventory when economies reopened. It's fixed that for the most part, and now it's on strong footing going forward, especially considering its long-term strategic investments it's made, namely the same-day services. That's been incredibly popular with Target customers. The buy online, pick up in store, buy online, pick up in a Target parking lot, and buy online and have Target deliver it to you in the same day within a couple of hours. That's been really popular with customers, and that's given it a competitive advantage against Amazon, because Amazon, as fast as it is, it can't be as fast as Target, because Target can utilize its 2,000 brick and mortar locations in the United States to get products to customers even faster. And if you could buy online and pick it up in the store, in the parking lot, you don't even have to leave your car, and you can have your item in an hour or two versus waiting 2-3 days when you order from Amazon. So that's a investment that's working really well right now, and I think it's getting even better going forward, because competitively speaking, it's a strong convenience additive to customers that makes it more interesting, makes it more worthwhile to shop at Target. And it's not trading expensively. Target's trading at a forward price to earnings of just 14.5. So you've got a business with a solid dividend yield, excellent cash flow from operations growth, a management team that has invested intelligently in the business, trading at a relatively cheap valuation. For all of these reasons, I think Target is an excellent dividend stock you can buy in December. And last but not least, I'm recommending Deere again. I recommended it in November. It didn't perform so well. In December, I'm recommending it again because it's still trading at a relatively cheap valuation, a forward price to earnings of 11.9, and Deere has done a great job in boosting its cash flow from operations to record highs, 8.6 billion in the trailing 12-month period. Now, I will note Deere reported earnings in November that forecasted a meager outlook for 2024. Deere told investors that it expects sales in a few of its segments to decline by 10% or more. Still, the profit forecast looked relatively strong, even though sales are falling. Deere is used to this. It's a cyclical business. It goes up and it goes down over the decades, over the economic cycle. The difference is that Deere right now is trading at a cheap valuation, and it's coming on the back of a huge fiscal stimulus package worldwide that has governments worldwide investing in areas that Deere could benefit from. And on top of that, commodity prices are soaring, so investment in equipment has increased due to the greater yields it offers and the benefits that people get when they upgrade to newer equipment. So for all those reasons, I'm recommending Deere stock again in December as another dividend stock you can buy right now. Did you know that over 90% of the views I get on my channel are from individuals that are not yet subscribed? To help keep this channel alive, let's try and get 10% of you that are not yet subscribed to click that button. Remember, the YouTube channel cannot survive without the support of viewers like you.